In 1798, a coin dealer in Frankfurt sent his son to England with a single instruction: build us a bank. Within 20 years, that family would be moving money across battlefields faster than generals could move armies. Within 50, they'd be the people European kings called when treasuries ran dry. And today, whether you realize it or not, you're living inside a financial architecture they helped invent. This isn't about conspiracy, it's about something far more interesting: how a handful of brothers turned information into capital, and capital into infrastructure so fundamental that modern banking still runs on principles they established 200 years ago. Let me show you how it actually worked. Before the Rothschilds, financing a war was brutally simple. A king needed gold to pay soldiers. If he didn't have enough, he'd borrow from local merchants or nobles, offering land or monopolies as collateral. The problem was scale. By the time Napoleon was tearing through Europe, wars had become industrial. Armies numbered in the hundreds of thousands. Supplying them required moving enormous sums across hostile territory, often to allies you barely trusted, using currencies that might collapse by next month. Physical gold was slow, vulnerable, and catastrophically expensive to transport. Imagine trying to pay 50,000 troops in Portugal when your treasury is in London, and Napoleon controls everything in between. You can't just pack the gold on ships and hope for the best. Pirates, storms, French privateers, corrupt officials, every mile was a gamble. This was the problem Europe faced in 1800, and this is where Mayor Amschel Rothschild saw something no one else did. Mayer wasn't born wealthy. He grew up in Frankfurt's Jewish ghetto, a crowded, restricted quarter where Jewish families face legal limits on property, profession, and movement. But restrictions create strange opportunities. One of the few businesses open to Jewish entrepreneurs was money lending and currency exchange, fields Christians had historically avoided because of usury prohibitions. Mayer started dealing rare coins, which brought him into contact with collectors, wealthy collectors, European nobility. One of them was Prince William of Hanau, one of the richest men in Europe. William had made a fortune renting Hessian soldiers to foreign armies, most famously to Britain during the American Revolution. He needed someone discreet, competent, and trustworthy to manage his growing wealth. Mayer became that person. But here's where it gets interesting. Mayer had 5 sons, and instead of keeping them all in Frankfurt, competing for the same clients in the same city, he did something almost unheard of. He sent them to different financial capitals. Amschel stayed in Frankfurt, Salomon went to Vienna, Nathan moved to London, Karl set up in Naples, James settled in Paris. 5 brothers, 5 cities, 1 family. By 1810, they weren't just running separate banks. They were running a coordinated network, and that changed everything. Let's say you're the British government in 1812. You need to pay Wellington's army in Spain, but you can't ship gold through a war zone. Traditional banking can't help you. There's no infrastructure for moving money internationally at speed. But the Rothschilds can do something remarkable. You pay them in pounds in London. Their brother in Paris or Frankfurt releases equivalent funds in local currency to your army in the field. No gold crosses borders. No ships get intercepted. Just information, trust, and accounting. This is called a bill of exchange, and it wasn't new. What was new was the speed and scale, because the Rothschilds weren't just bankers. They were a communications network. They maintained their own courier system faster than any government. Carrier pigeons, riders on prearranged routes, agents in port cities. Nathan Rothschild in London could know about a battle outcome, a harvest failure, or a political shift days before his competitors. And in bond markets, days meant everything. Here's why. Governments didn't just need to move money, they needed to borrow it. They did this by issuing bonds, promises to repay investors with interest. If you trusted the government, you bought the bond. If the government won its war, paid its debts, and survived, you made money. If it collapsed, you lost everything. So bond prices moved on news. A military victory, prices rise. A defeat, they crash. Whoever knew first could buy low or sell high before the market adjusted. And the Rothschilds knew first. Now, this is where the myths start. You've probably heard the story. Nathan Rothschild learned that Wellington defeated Napoleon at Waterloo before the British government did, then manipulated the London Stock Exchange to make a fortune. The story goes that he pretended Britain lost, crashed the market by selling, then secretly bought everything cheap before the truth came out. It's a great story. It's also almost certainly exaggerated. What we know from historical records is this. The Rothschilds did have a fast courier network. Nathan probably did receive early news of Waterloo. He likely profited from that information. But the dramatic tale of deliberate market manipulation, selling to create panic, then buying in secret, appears in sources decades later, often in anti-Semitic pamphlets designed to portray Jewish financiers as sinister manipulators. The truth is less theatrical, but more important. The Rothschilds made their real fortune not from one clever trade, but from being the primary underwriters and distributors of government bonds across Europe. They didn't need to trick markets. They were the market. Let me explain what that means. When a government wanted to raise money, it issued bonds. But bonds are only valuable if people buy them. So governments needed intermediaries, banks who would purchase the entire bond issue up front, then resell it to investors across Europe. This required enormous capital, widespread distribution networks, and most importantly, credibility. The Rothschilds had all three. If a Rothschild bank underwrote your bonds, it signaled to investors that your government was creditworthy. It meant the Rothschilds had done due diligence. It meant they were willing to stake their own reputation. That endorsement was worth as much as the capital itself. After Waterloo, Europe needed reconstruction. France, despite losing, needed loans to pay war reparations and stabilize. Austria needed funds to recover. New nations forming out of the wreckage needed credit. The Rothschilds financed them all. They arranged loans for the French Restoration government. They funded Austria's recovery. They financed Brazilian independence. They underwrote bonds for German states, Italian principalities, and the Ottoman Empire. But here's what made them different from earlier financiers: liquidity. Before the Rothschilds, if you bought a government bond, you were stuck with it until maturity. It was an investment, not a tradable asset. The Rothschilds created secondary markets where bonds could be bought and sold continuously. This made bonds more attractive to investors because they weren't locked in. It made governments more creditworthy because their debt became fluid, tradable, a genuine financial instrument rather than a static promise. They essentially turned government debt into a commodity. And this is the system you can't escape, because this is how sovereign debt still works. When the US Treasury issues bonds, when Germany borrows, when any government raises capital through debt markets, they're using mechanisms the Rothschilds helped establish. Not because the Rothschilds still control it, they don't, but because the infrastructure they built became the foundation for modern finance. By the 1830s and 40s, the family's influence extended into industrial finance. They funded railway construction across Europe. Railways were the internet of the 19th century, expensive, transformative, and requiring capital beyond what any single government or company could provide. The Rothschilds financed rail lines in France, Austria, and Italy, connecting markets and accelerating industrialization. They financed mining operations. They funded the Suez Canal share purchase that gave Britain control of the route to India. In 1875, Prime Minister Disraeli needed £4 million immediately to buy shares before France could intervene. Parliament wasn't in session. Lionel de Rothschild provided the money overnight. But influence isn't the same as control, and this is where we need to be precise. The Rothschilds were extraordinarily powerful, yes. They had access to heads of state. They influenced which governments could borrow and on what terms. They profited immensely from wars, instability, and reconstruction. But they didn't control governments. They couldn't force kings to fight wars or make peace. They couldn't dictate policy. They were service providers, albeit exceptionally influential ones, whose power depended entirely on governments continuing to need their services. And governments did need them because the Rothschilds solved a problem no one else could. International coordination of capital in an era before telecommunications, before international institutions, before the modern regulatory state. But this also made them vulnerable. As Europe modernized, so did banking. Joint stock banks emerged, corporations that could raise capital from thousands of shareholders rather than relying on family wealth. These banks were more flexible, better capitalized, and less dependent on personal relationships. The rise of central banks, institutions that managed national currencies and acted as lenders of last resort, reduced the need for private financiers to stabilize government debt. Technology eroded their information advantage. The telegraph, then the telephone, meant everyone could know about events quickly. The Rothschild courier network became obsolete. And then there was the anti-Semitism. Throughout their rise, the Rothschilds faced prejudice. Political cartoons depicted them as octopuses wrapping tentacles around the globe. Pamphlets accused them of starting wars for profit, controlling governments from shadows, manipulating currencies to impoverish nations. These weren't fringe accusations. They appeared in mainstream publications, debated in parliaments, repeated by politicians. Some criticism was legitimate. Concerns about concentration of financial power, questions about whether private banks should wield such influence over public debt, debates about accountability. But much of it was coded or explicit anti-Semitism, using the Rothschilds as symbols of broader anxieties about modernity, capitalism, and Jewish integration into European society. These conspiracy theories intensified in the late 19th and early 20th centuries, particularly during economic downturns. When people suffer, they look for explanations. Simple narratives, secret cabals, hidden manipulators, puppet masters are emotionally satisfying even when they're factually wrong. The rise of fascism made this deadly. When the Nazis took power in Germany, Rothschild assets were confiscated. The Vienna house was forcibly liquidated after the Anschluss in 1938. Family members fled. Some didn't escape. The Second World War didn't just disrupt the Rothschild banks, it shattered the world they'd operated in. After 1945, international finance looked completely different. The Bretton Woods system established the IMF and World Bank. The US dollar became the global reserve currency. American banks, JP Morgan, Goldman Sachs, Citibank, dominated global finance. European economies rebuilt under American influence. New regulations governed banking. The era of family banking houses directing sovereign debt markets was over. The Rothschilds adapted by specializing, mergers and acquisitions, wealth management for ultra-high net worth families, niche financing in mining, energy, and infrastructure. They remained significant, but they were no longer central. Today, Rothschild & Co. still exists. It's a respected advisory firm. But if you look at the largest banks in the world, JP Morgan Chase, Bank of America, ICBC, HSBC, Rothschild doesn't make the list. They're influential in specific sectors, but they're not systemically dominant. So why does the name still carry weight? Why do conspiracy theories persist? Because the system they helped build is still here. Government bond markets, international capital flows, the idea that creditworthiness is tradable, the infrastructure allowing money to move across borders at speed, secondary markets for debt, the relationship between finance and state power, the role of private banks in underwriting public borrowing. These aren't Rothschild creations alone. They emerged from broader economic evolution. But the Rothschilds were architects, innovators, and beneficiaries of these systems at a critical moment when modern finance was taking shape. And here's the uncomfortable truth. Financial power is always concentrated. It has to be. Moving large amounts of capital requires trust, infrastructure, and expertise that only a few institutions can provide. In the 19th century, it was family banks, like the Rothschilds. Today, it's multinational corporations and central banks. The names change. The dynamic doesn't. This is what people sense when they talk about systems they can't escape. Not that the Rothschilds specifically control anything, but that financial infrastructure operates according to logics most people don't understand, benefiting those who do, creating dependencies that feel inescapable because, in many ways, they are. You can't opt out of bond markets if you live in a country that borrows. You can't avoid international finance if you use currency, pay taxes, or participate in an economy connected to global trade. The system is the water we swim in, but understanding how it developed, who built it, why, and how it actually functions gives us something more valuable than fear or resentment. It gives us clarity. The Rothschild story isn't about a family controlling the world. It's about how innovation in finance creates leverage, how information becomes power, how trust becomes tradable, and how systems designed for specific historical problems outlive their creators. They didn't control everything. They controlled enough at the right time to profit immensely and shape structures that lasted. That's not conspiracy, that's history. And history doesn't have villains and heroes. It has people responding to incentives, solving problems, competing for advantage, building systems that serve their interests and sometimes, accidentally, everyone else's. The infrastructure remains because it works. Governments still need to borrow. Capital still needs to move internationally. Investors still need liquid markets. Central banks still manage currencies using principles established when the Rothschilds were underwriting European debt. What's changed is accountability, regulation, transparency, democratic oversight, the things we built afterward to constrain the power that families like the Rothschilds once wielded without check. We can't escape the system, but we can understand it. And understanding is the only real power any of us have. The Rothschilds built something remarkable, a network that turned information into capital, capital into creditworthiness, and creditworthiness into infrastructure. They did it through intelligence, coordination, and ruthless efficiency. They profited enormously. They influenced governments. They helped shape the modern world. But they didn't control it. No one ever does. Not for long. Systems are bigger than individuals. They evolve. They adapt. They outlive their creators. And that might be the most important lesson of all.